Housing has long been a vital component of American economy, yet the sector is in crisis. I'm Johanna Bota, and joining me today to break down what's behind the slowdown and what it could mean for the broader market is StoneX risk management consultant and lumber specialist Alex Mead. Welcome, Alex. Let's start with higher lumber prices, which are the result of a reduced supply, an issue that goes well beyond the Trump era politics. Can you walk us through the history of the U.S.-Canada softwood lumber dispute and explain what happened after the two countries chose not to renew their agreement back in October 2015?
Absolutely. Thanks for having me. Yeah, there's something called the SLA agreement, the Softwood Lumber Agreement. And back in 2015, the agreement expired and there was a 1 year intermission period. And so in 2016, they started the current practice. It's called the annual review, and it deals with the anti dumping and the countervailing duties. Each year, the Department of Commerce reviews. There's a metrics of things they look at to determine what the rate's going to be. And so currently, AR5 is the current one going on. AR6 is going to be implemented in August or September. And there's people called mandatory respondents and all others. The mandatory respondents have a set duty rates, and then the all others, everybody else in Canada. And the rates are going from 14% all the way to 35.4%. So it's a big jump, and ultimately, that's a cost that these sawmills can't bear. And right now, in the past, there used to be agreements made, and there still can be an agreement made between Canada and the U.S. But the U.S. Lumber Coalition and um, Canada, it doesn't seem like they want to come to an agreement right now. And so when these duties get implemented, it is going to dramatically increase the cost of the sawmill. And it's if you look at these sawmills that are publicly traded in Canada, they're losing a lot of money. And so if you increase the cost, in theory, it will have an impact on supply. Less supply means higher prices.
And we're going to get into that a little bit later. But can you explain, why does Canadian lumber play such a critical role in U.S. home building, especially since the U.S. is also a major producer?
Yeah, so Canada, the softwood lumber, the framing lumber, think of it, the lumber that goes behind the drywall accounts for about 25% of the U.S. market. And just kind of how that lumber is designed, it doesn't bend, it doesn't bow, so it's very vital to the single family housing market. You can't just species swap. So, for instance, there's something called southern yellow pine that is produced in the U.S. South. It is not used for framing lumber. It's more for floor trusses and roof trusses. So, although that we can increase production maybe in the Pacific Northwest, that takes years. I mean, a lot of investments for these sawmills to build, new sawmills or to add new equipment to increase production. So if you just shut off the supply in Canada, you can't magically create new supply. It's a slow process. And so that's why it's very vital that from a lumber perspective in a house, that we use Canadian lumber.
And I want to talk about tariffs now, which is all tied in, right? They could drive prices even higher when or if they're imposed, because we don't know. The cost of lumber, like you said earlier, and other building materials will rise, and that's going to push the overall construction expenses. Could this add even more pressure to an already strained housing market?
Yes, it could. And I think the way I want to describe it too, it's a little confusing. The duties that we're talking about, the AR6, the countervailing duties, and the anti-dumping, it is a no. These duties will be implemented unless there's an agreement. Now, with this, there's also something called Section 232, and the White House, the administration for national security are looking at lumber, just like steel and aluminum. That could be an additional tariff on top of that. And then, the blanket tariffs back in April, 25%. I mean, so I think of it a three-legged stool. You have the AR6, what's been in practice since 2016. That is known. That will happen. It's just, is it August? Is it September? And then the Section 232, the blanket tariffs, those could happen, may not happen. But what we know as far as the AR6, the 14.4% all the way to 34.5 will happen.
Of course. Now, from a more distant point of view, tariffs have also added another layer of uncertainty to the markets. Now, we're going to add to that the fact that in an effort to fight pandemic driven inflation, the Federal Reserve raised interest rates, pushing 30 years fixed mortgage rates from around, I think, 3% in 2021 to nearly 7% earlier this year. So, given these pressures, how do you see the housing market evolving in the months and the years ahead?
Yeah, I think right now the Fed is projected to cut in September. And again, it changes on a day to day, week to week basis. Ultimately, if we can get the 30-year fixed rate down to that 5.5%, we have the US midterm elections next year. If the Fed can pivot, if we can get the 30-year rates down, that will help the housing market. But if rates stay at 7%, if we add increased cost in lumber, housing affordability is a real issue right now. So ultimately, if the Fed can cut, I think that that will entice more home buying. If you increase the demand and you slow down the supply because Canadian sawmills are losing money, you could have an undersupplied market. And I like to think of it this way: demand is the speedboat. You can flip the light switch off and on if they choose to cut rates. But these sawmills, when they shut down operations, they're in rural areas. They're gone, permanent shutdowns. So you can't just magically create new supply, and it can cause some chaos in the market, especially from a pricing standpoint. I don't want to use the term, but COVID, we kind of saw that. You saw the housing market, this demand side increase dramatically with low interest rates, and you saw supply shut down for good reason, and you had this really imbalance in supply and demand.
Yes, that's right. I tried to buy a home and redo a home around COVID, so I remember it vividly. Thank you, Alex, and thank you so much for watching. For more financial content like this, don't forget to like and subscribe to our channel.